Hello and very warm welcome to ETBFSI Converge 2021. In this special Fireside chat discussion focused on transforming banking experience in digital era, we are going to discuss how banks can deliver seamless customer experience offline and online, and also the challenges and opportunities for BFSI sector as we move into a hybrid world where things are going to be both online and offline. To lead the discussion today, I'm joined by Mr. Soumya Chatterjee, co-founder and CEO, Easyrewardz Software Services. Thank you, Mr. Chatterjee, for your time. Let me begin by asking you what we have observed during the COVID-19 pandemic, that digital transformation and hybrid models are now going to be a new reality for most of the sector, be it bank, overall BFSI, reality, retail. Do you think an inbuilt strategy to deliver seamless customer experience offline and online should be the priority for the BFSI industry to create a kind of differentiation, the value that the experience that it offers to the customer?
Yeah, actually, if you look at it, this has been in the making. So we have a new term for this industry, fintech, right. Where, touted by investors and promoters. So, I think the fintech journey or the fintech revolution in India started about a decade back. You had early players like Paytm coming in, wallets coming in fact. And you also had these. So I think the first thing that happened was this institution got created called NPCI. Right. And they launched the RuPay debit card because they wanted to create something relevant to China Union Pay and sort of have MasterCard, Visa's stranglehold on the debit and credit card industry, sort of have an Indian product, right? And then they started to do this this payment system called IMPS that came in, and then you had wallets coming in. But what I think what we are in middle of now is a fintech storm. It's a storm, right? and I think you have several things that's happening and hitting the traditional banking. You have what you call neobanks come up, right? Which effectively are digital banks. And while they don't have RBI's approval, because RBI still wants a bank to have a physical presence for customer trust and other things, but they are tapping into a millennial generation or a Gen Z generation, in terms of providing a lot of banking services without really wanting to visit the branch. And they have a traditional bank behind them, right? You have a Jupiter, which is powered by Federal Bank, right. You have Neo, which is powered by banks. You have a concept of a recent phenomenon that is coming in is BNPL, right? Huge, transactions moving to BNPL. Everybody's going gaga. But what's BNPL doing is fundamentally BNPL is, initially we thought that BNPL was about financial inclusion, but I'm a big subscriber to BNPL, and I do that because of convenience. Because the moment, if you look at what's happened with COVID or post-COVID, is that a majority of our transactions have moved digital. While this push was going on for a decade old, but then COVID sort of accelerated it. Two things accelerated: demonetization accelerated, then COVID also further accelerated. So there's a big move to digital, right? And the traditional banking products cause a lot of friction in completing digital transactions. We used to see over 35 to 40% failures when you move a payment for net banking or on debit card or on credit card, because people forget to write, all the details. There's a CVV mismatch sometimes, OTPs don't come. Now, these are being very seamlessly taken care of by wallets or BNPL products, where there is frictionless checkout, as you want to call it, right? Now, what this is leading to is the bank's traditional channels of earning money from interchange or transaction revenues, that's being hit. So at one point of time, at one end, you have RBI capping it on debit cards. On the other side, you have credit card products, which used to provide EMIs, being replaced by BNPL products, which can also ride on any payment mode, for example, right? So that's another disruption. Then you have obviously the P2P lending concept that's coming, right? And where you have apps like you have like a UPI apps or your wallet apps, or even you have specialized apps like FairSend, where you do a lot of P2P lending. That's coming in, which is taking away the reason for a customer to visit a branch or interact with a bank, right? And obviously UPI has been a game changer. And what's UPI hitting obviously is, while UPI is still linked to the debit product, but I think UPI is obviously hitting the credit product also a little bit, and debit cards. So debit card as a concept, right? is being very, very aggressively replaced by UPI to some extent, because they both hit the savings account, right? So a customer doesn't really need to carry the debit card anymore for a lot of reasons, because you have a UPI app which is doing the same thing and doing it but much easier, right? And I think the last bit of it would be the NBFCs and the rise of NBFCs, where they have alternate ways to provide credit. So that was one more thing banks were serving, which were loans, right? But then because of whatever NPAs and their regulatory ways of serving, customers, you have a Bajaj FinServ, which has been a bit huge disruptor in the space, right? With a 65% kind of market share in consumer lending opportunities. You have student loans that comes in. So you have salary-based lending, which banks never did. A plethora of products which are into cashy or early salary, they all are into that space. So I think there are so many more models that have come in beyond traditional banking, which are all chipping away into each of these pillars of banking that traditional banking had, right? So when we work with a bank today, and when we implement our solutions, you have these LOBs or lines of businesses. Right? You have a CASA, then you have a digital bank like a mobile banking, net banking, then you have loans, then your mutual funds. For each of this, there are now specialized products or specialized companies. So how does a bank stay relevant, or what you call those 52 or 55 banks which stay relevant, right? I mean, again, you have small finance banks or payment banks also. So if I say, if you look at institutions, which are defined by the bank law or whatever tracked by RBI, these are about 45 banks, including private and public. Okay, before the movement of payment bank or small finance bank started. So how does a SBI react to this? I mean, yet they have a YONO, which you've come up with, but then are they really, and they are also working with a lot of startups, but are they really, still providing some a better online experience so customers don't visit branches? Are they providing better experience so that I don't call the call center? Is their bot enough? So these are questions to be asked, right?
Right.
And then you also have issues around merchants. Because while we talk about customers, I think banks rely on three entities. They rely on customers, they rely on SMBs, and they rely on merchants.
Absolutely.
Right? SMBs have been hugely underserved by a lot of banks. Right? In fact, the recent COVID, due to COVID, whatever was provided to MSME, they were also not very well disbursed by a lot of banks to SMBs. Right? So SMBs are also going in for different kind of products. You have invoice discounting products like Credex coming in, which are providing loans to SMBs based on invoicing. So you have products around different ways of SMBs credit scoring. But a lot of SMBs were not scored for enough being credit worthy.
Right.
So SMBs are also moving away to other products. Merchants are being getting savvy of not using a POS machine like the traditional swipe machines, which used to be one more source of income for the banks, well, for the acquirer banks essentially. So now you have Android POS based; they can just use any system to accept a payment. So I think yes, they are under threat. I think the traditional banking, the way it used to be, has to change very rapidly. Right. And while I know it's very regulated, and there are a lot of risks in the business in terms of if you don't regulate it, because obviously there's a security issue,
right.
There is a data protection issue, there is a credit being becoming an NPA. That's an issue, but I think there is still a lot of scope for innovation, and I think banks have to understand, and we have been talking to a lot of banks. I mean, I've been in this space for about 13 years now, that don't take your customers for granted, because you are not providing something that's essential, but you are also providing something that is being offered by other people. So it's not like it's not, SBI is not the only bank in the country anymore. HDFC is not the only bank in the country anymore, right? Where I can go to and I can get my needs served, right? So it's not so customer has to be at the core of it, not the fact that okay, I'll keep your money safe. It's not
but that ultimately brings to the question of differentiating yourself with customer experience, and as you mentioned earlier on the trust part. So what we understand that most of the traditional bank might be having a trust factor which is a bit higher compared to fintech, but they are not offering the kind of agility and scalability that fintech is able to offer.
Yes.
So how do you balance both of these things, trust and agility, and then ensure the customer experience that you should be offering? Because tomorrow, for example, WhatsApp has started payment, right?
Yeah.
Tomorrow, like Apple or Google, these companies are huge, and Amazon,
Correct.
and their customer experience level, whatever they're offering to the customer is, up to a completely a different level already.
Right. Absolutely. So I think there are two ways to look at it, right? One is that what would a bank stand for? First you have to do a bit of soul searching and see that would you want to sit behind an experience platform? For example, would you want to not innovate and like a federal bank? For example, would they want to offload their entire customer experience to a Jupiter, which is a neobank riding on it? And they said, okay, fine. Since I have RBI approvals, I'll do all the heavy lifting at the back. But you know what? You are great and you can provide the experience, and I'm not really cared. So you take that responsibility. I take the back end. That's one way to go it, right? Or like a Kotak, which is also one of our clients, and we work with them very closely. I mean, Kotak's come up with 811, and they have a team now in place. Which is called Digital Bank, right? So they started this during COVID, I think early COVID, but they have now revamped the product. And also, I think what happens is, this is a choice. This is a path that you have to go to, where the choice is essentially, as I said, that you become a heavy lifter behind a good CX platform that you don't own, or you build it yourself and you own it yourself. It can't be a haphazard process. What I see is that the banks take a knee-jerk reaction to do an initiative that they don't fully commit to it, right? Like for example, Axis acquiring Freecharge, and then what did you do with it? Now you're launching Freecharge again back after 4 years. You've made 3 management changes, but Freecharge was at least a contender for a wallet or a product when it was acquired. Then it completely went out of public memory after acquiring it. So you spent 250 crores. You did not know what to do with it. And now you're coming back trying to create a new bank out of it or a new experience out of it. So you can't do knee-jerk reactions in this, right? You lose more customer confidence. So I think the banks have to first decide which way they want to take. If they think that they are not innovative enough, they need to partner with new fintech companies more. Right. They need to be more open about it, which leads to the question of open banking, right? So while RBI rules all of these with their regulations, and obviously you weigh in on this, but I think banks' technology also needs to be updated. They need to be more open about it so that they can partner with these firms and provide that trust. Right. So today a neobank suffers from lack of trust. That's what RBI says, right? Now banks have trust. So why does the partnership deliver more? Why don't they partner more with companies which are providing or disrupting it? Or, as I said, they commit to a strategy, and then you have customer at the center. And it doesn't really start with an external upgrade. It starts with an internal upgrade, because what we don't realize is that the staff who is delivering this is still working on 80 systems, or you still have a issue of moving to cloud. Right. You still have an issue about accessibility. I still cannot, for example, I talked to a branch manager after 7 p.m. He says, I can't access my system, sir. Call me at 11 in the morning. Absolutely. Right. So why can't I do it? I mean, I can have biometrics. I can do some scanning. I can do retina scanning over my laptop today also through a camera, right? I mean, why can't you innovate so that, or you do a VPN access? So that here's the quirk. The developer team, which works on those servers, actually can log in from their home using VPN. The business users who are using those systems can't do that. Now, how does a developer get more certified than a branch manager? I mean, what kind of security things he has? Does he have a chip in his arm that he can be tracked and the branch manager cannot? So that's the mindset you need to get out of. Right. One is the mindset, I believe, that you said. Other also the fact that most of these traditional banks, they are 30, 40 years old, and they have invested a lot in traditional technology. Be it the backend management, database management. And we are in the age of autonomous database management. Right? To adopt that and to migrate or modernize from traditional to the modern, that means you need to invest into Kubernetes, containers, the new thing that is happening. First, adopt cloud. I think the first step is to adopt absolutely. Cloud, then you can actually... And see, the point is that we keep saying all of these things about cloud not being secure and everything, right? But you look at other countries, right? And you look at advanced countries where they are on cloud for many years now, right? And they have right regulations and right security to take care of breaches. How is it that the data servers that are not on cloud cannot be breached? There's nothing around that, right? There can be manual breaches also. The guy who's accessing it can have a malware, so a lot of things can happen, right? So it's again a mindset. First, you move to cloud. there was a big revolution which happened in the banking industry 20 years back when you had core banking come in, which was, which led to ATMs and everything. So I think that another revolution has to happen so that it moves to digital.
Absolutely.
Right?
So
And
do you think that once we have the data protection bill, which is pending with the parliament, likely to be taken in the coming session, once we have that bill, there will be more clarity as to how to process the data, how to get the data, and that could lead to establishment of data officer type of people in the organization, and that will ultimately boost the confidence and some clarity. And then possibly we could have more adoption of cloud in terms of the multi-cloud, maybe hybrid cloud, private cloud. I mean, different types.
So I think, yes, I think what you're saying is very pertinent because we don't have a single policy. We don't have a canopy policy, right? So today what happens is RBI has this IT Security Act, which came in, which talked about P2 data protection. Okay, that's one. Then you have certifications. You have a PCI DSS certification, which is not Indian. It is based on payment card providers. And the very quirky issue about this is that it only applies to payment cards issued by 6, card providers. Right. Not RuPay. But RuPay follows that norm without sitting on the board of PCI. PCI has MasterCard, Amex, JCB, the diners, all of these guys, not RuPay. But RuPay has adopted those norms. Okay, great. So now PCI DSS is for payment card. Then we have ISO 27001. Then we have SOC. So we also have those certifications. Bank also but every bank follows a different process. So I think the policy which you're talking of will help companies like us or even new companies which are coming in to have a common ground for data exchange. Right. So banks have a CISO. There's a Chief Information Security Officer because it's required. And then the problem with these policies today as it exists is that they give a framework and they say you create your security posture based on the framework. Right. So you are continuously meeting the security requirements of different banks, which have different requirements. It's not, I wouldn't say everything different, but I think 70% common, 30% different. Absolutely. Now, if I'm working with 10 banks, then that 30% adds up to become 300% also. Right. So I think we need a common policy. And the problem obviously is that I think there is, to some extent it is true, to some extent it is something I say hiding behind behind the wall, which is RBI's guidelines also. So RBI has been very stringent in the last 8-10 months, I think 12 months now, in fining banks, in stopping banks from doing stuff. Like HDFC was stopped from issuing credit cards for about 3-4 months. Amex is still stopped because the server's data is not in India. RBL was imposed a fine. So Paytm was imposed a fine. So a lot of RBI has been doing a lot of audits, right, which is required. And I don't say it is not required, but as I said, you have to have a uniform policy. Right. When it comes to customer experience or working with customers, right, which has to be adopted across banks. And I think that's one reform that's pending beyond the data protection bill, which is essentially about exchanging payment data. Because when you talk data protection, is more about consumer data, and it is different from payment data, right? Payment information exchanges and how you take care of it. But I think going back to the original, question that we were discussing, I think the challenge of the bank is, as I said, from mindset, moving out of the shadows of this, for last 40 years or 30 years, but I think it's also to do with, having the right people. Right. So I don't see a lot of, so why does a bank still not have a CTO? Right. Why are they having CIO? So there's a difference between a CTO and a CIO, right? A CIO is somebody who fundamentally works with vendors to implement a technology. Right. So banks don't see themselves as technology institutions, right? Technology firms, right? Whereas, this was a Forbes article that everybody is a technology company, right? I mean, General Motors is a technology on wheels. You have, HDFC is also calling itself at some point of time. HDFC Life is calling itself as InsurTech. So then why doesn't a bank, call himself or starts to adopt itself as a fintech institution, right? Or a technology institution. So I think the first thing is that it starts from the top. Absolutely. That you need to have a CTO. You need to have, even if you're not engineering inside, you need to develop products inside, and you need to work with partners. Right. So you have that engineering mindset, that product mindset, right? And that's how you overhaul your legacy. Because what would happen to a bank today is the moment they want to do a technology upgrade, They would write an RFP. Now the RFP will be written by somebody who's never developed the technology. They will also not invite consultant. Who will come for consulting? It will be a McKinsey or an EY, or somebody will come for consulting.
Right.
And they will write a very archaic, very, article, and then they'll invite a Microsoft and Fiverr comes to come in. So you'll move from traditional 1 to traditional 2. It's a 2.1.0 to 2.0, right? So they need to be more open. And I think that's working with fintech startups, have more startups come in, pilot it. They need to create an environment for innovation. And I think the core thing is that they need to start thinking that they're serving a very different generation of customers.
Absolutely.
That's a big mind shift, right? Because I think India today has 60% of its youth in the digital youth. Fundamentally, we call digital customers. 60% of them are the less than 30 years of age, right?
Right.
So they are your consumers. And they are consumers who are exposed to a digital world. Not our parents or our uncles or our grandfathers, right? So they don't like walking into a branch. Branch is not the subah ka chai ka thing, right? So we come to the branch, withdraw $100 for the day, go back. At some point of time, our parents used to do that. Or our uncles used to do that, right? It's nothing anymore. I don't want to visit the branch. I don't want to talk to somebody. I just want my money and go. So I think that mindset has to change. The first, they have to understand that they're serving a very different customer, right? So today, we talk about this all the time. We develop bots also for banks, and we say that the reason you need to have a 24/7 service is because you don't know that the person whom you're serving, what time he's actually free to talk to you. People are doing jobs which start at 7 in the evening, goes till 4 in the morning, or they're doing jobs. So you have a different set of working lifestyles also.
Right.
So you can't be saying that 9 a.m. to 9 p.m. or 10 a.m. to 6 p.m. 7 p.m. is when my customer service team is available to talk to them. Right. And why do I need to talk to somebody to get me served? So you have to move to a bot experience, or you have to move to a self-serve experience. And you have to have the wherewithal or the commitment to develop that channel, to make it more embedded. Today also bots are very limited.
Right.
They will not commit a transaction on your behalf. Why will they not commit a transaction? If I am authorizing it, it's my account, it's my money with your bank. I'm authorizing it. I'm verifying myself. So I think that's one thing that they need to understand. As I said, you have to build solutions thinking customers in mind.
Absolutely.
Not thinking yourself in mind.
Right.
So that's the CX. That's the concept of CX coming in, right?
Right.
So
Mr. Chatterjee, if I have to ask you, this will be the last leg of the question. What are the top 2 priorities that you see for the industry that your organization serve down the line in 1 year or 2 years, given the fact that we had an experience of pandemic over the last 2 years?
Sure. So I think, basis on what we do, right? We do 2 things for consumer businesses that we serve. So we work with a lot of consumer businesses, be it in hospitality or even healthcare now, retail, fashion, and all. So what we enable for these consumer businesses is essentially a customer lifecycle management solution. It starts from the first time the customer is reaching to you when he's not even a customer, to the fact that how he becomes a customer, how you engage and grow, make him grow with you, how you retain him or her, how you continuously discover their interests and continue to align, what you can offer, so that you are aligning your business objective with their interest to create the situation. That's one thing we do. We also do a lot of commerce enablement through social channels. I mean, Shopster is one of our hallmark products. So we have been working with banks more in the reward space. We have been, helping them create manage their reward journeys, create a certain portal or app where they can consume more rewards and get benefits. So we think that this is an opportunity where we want to bring in more of our other consumer business focused solutions to the bank. For example, how do I enable a customer to so when I go for rewards, right, and I understand the customer certain commerce traits while he's consuming reward, like he's, for example, continuously booking flights, or is redeeming his points or benefits for a movie ticket, or, for example, for doing his bill payments. So how does that information pass back or help the bank to engage on the cash when the transactions are also not just reward transactions. Reward transactions are maybe 3% or 5% of the transactions, right? So if he's using his points to make bill payments, then can I not make it like an auto rule? So how do I create more smarter rules for customers not coming to you to transact more, but you learning from your customers and transacting on your behalf, right? So simple things like bill payments. We all do bill payments, right? Some of us make it on auto pay, some of us say confirm and pay. Sometimes what happens, we run out of balances and the bill payments fail. But if a bank is offering me a savings account and a credit card, so why can't the bank automatically take an approval from me that if you don't have enough money in savings bank, can I dip into a credit card? Because I also know balances. Why they can't do that? Because it's two different systems.
Right.
So we want to create that bridge layer where we can run certain smarter rules for using customers, or learning from customers, their interactions, how I can make the customers' experiences better with the bank without the customer reaching out and without the customer coming back to you. So this is going to be driven by two things. One is our lifecycle management suite. The second is our CDP, which is a customer data platform, which is not just the data warehouse. I think all banks have implemented data warehouses, but they have not implemented it from a customer-centric approach. So the CDP basically does two things. One, obviously collects all of the data. Second, it runs a lot of proprietary models, where it detects certain customers' propensity, detects certain, if a customer is not engaging, so is he prone to churn out, or he's inactive, or is lapsing, or a customer might be spending less with you than he was before. So these models run on the stack, and they also create what we call derived attributes. And that sort of feeds back into the workflow systems. So today, for example, the very simple thing is if you have walked into a branch at all, and through the CDP powered insights, the branch manager or the teller is able to say that, okay, you have not been interacting with the bank as often. Right. They can run, they can ask you certain questions in the sense that, okay, what's been the problem, or have you been out of the country, or have you started using some other product, and get that feedback. But if the teller is not prompted, what will you do? Sir, what do you need? Okay, you need this check cashed. Fine, please wait, resume money. So how do our CDP, how do this central data warehouse create insights that can touch at each touch point, be it a bot, be it a customer support, be it a branch? So that those are the two things that essentially we want to do: lifecycle management. Absolutely. And implementing the platform.
Absolutely. Mr. Chatterjee, thank you so much for your time. You spoke quite well on the transforming banking experience in digital era. Thank you so much for sharing your views. Thank you.
Thank you so much. Thanks, Mohd. Thanks. Bye. You have a great day. Bye.